Hey traders and investors, it's Serge Berger here. The Doomsayers eventually will be right. That's the title of today's video. Let me tell you though, I mean this very much tongue-in-cheek. For the most part, the folks out there proclaiming that we are heading for a disaster, the world's falling apart, and you can see some of these headlines here that I've listed. For the most part, those people are in the business of spreading fear. They're in the business of selling fear. Believe it or not, selling fear actually is a good business model. These people sell newsletters, they get paid to come on TV, to write for certain articles, to have appearances and give speeches. All this entire business of selling fear is a big business. Eventually, though, they will be correct. But it's not because they're good at what they're doing. It's because eventually some sort of a downturn, whether that's a 10, 15, 20% plus correction in equities, will come to pass. Just like at the same time, at some point, bond prices will continue to fall. Those are all, for the most part, cyclical things. Now, I'm not saying that the world can't fall apart. For all I know, it is possible. But I can tell you, for the most part, it's very unlikely that all of those things that these people are saying are going to happen. Certainly not in the time frames that most of them proclaim this to happen. But if you see them getting louder and louder because the stock market's down, 1%, 5%, maybe 15, 20%, just know that they're in the business. They're doing this as a business model for the most part. That's point one. And point B, the cyclicality of markets is really what their best friend is. The other reason why I think it's somewhat silly to listen to the doomsayers is because at the end of the day, price action, and I tell this to my clients and subscribers every single day, price action for those of us that are actually in the business of making money in the markets as opposed to making money from spreading fear, is really the only way to get paid. So if you would have listened or continue to listen to the doomsayers, you would have missed out on about 176% rally off of the lows in the S&P 500 since 2009. Even if you wouldn't have participated in half of that, you still would have made a lot of money. So the doomsayers continue to basically keep a lot of folks from focusing the only thing that's paying them, and that's really price action. By the same token, we can look at the big divergence that's happening in global asset classes. So here is a bit of a darker looking chart. If you can't see it, don't worry about it too much. I'm just going to tell you what's going on. But on this chart, basically, we have a lot of different asset classes, from commodities to bonds to high yield to credit, and of course the dollar and equities. For the most part, the dollar continues to trend lower and basically diverge from a lot of these asset classes. Particularly, this year, you can see the dollar is actually this purple line here. So as long as the dollar continues to push lower on the back of the government essentially having a low dollar policy, the asset classes will, for the time being, rise higher. Once these things once asset classes start catching up with the dollar, i.e. going lower, and the dollar maybe gets a bid, then we may be in a point where things get a little bit more serious, and we may be due for a more cyclical bear market, which I still suspect will happen at some point over the next 3 to maybe 9 months going forward here. So I hope this makes sense as always. If you got any questions, please tweet me at my Twitter handle, which is SteadyTrader.